Thank you for joining us at XM.com for this Forex Preview video. We'll be having a closer look at UK data coming up this week and the outlook for the pound. I'm Cristina Marujos. With me today is investment analyst Cristina Barthenidou. The GDP print for March is out on Thursday. Cristina, markets, though, are expecting a slowdown. What are we likely to see in the numbers, and what could that tell us about the state of the UK economy right now?
Hi, Christina. Indeed, according to forecast, the UK economy had probably been operating at a slower pace during the first quarter of this year compared to the end of 2021. Estimates suggest a weaker GDP growth of 1% compared to 1.3% previously. But compared to the same period last year, it's expected to have gained momentum, growing from 6.6% to 9%, which is still softer than the double-digit annual expansion readings it registered during the first two quarters of 2021, but it's still robust, especially when compared to pre-pandemic levels. So despite the quarterly and perhaps a monthly slowdown, the data will still reflect a healthy, growing economy if they come in line with expectations, justifying the three rate hikes delivered by the Bank of England as well. Now, on the other hand, the stats will not be enough evidence to change investors' bleak outlook on the economy, because the effects from the Ukrainian war, particularly the inflation spikes coming from the sanctions and supply disruptions in the financial and other industries, could be more evident in the next GDP releases. We recently saw services business PMIs for the month of April falling to the lowest in 3 months. New orders growth dropped to the lowest for this year as well. So, of course, business PMI's data are still comfortably within the expansion area, but the steep drop is something that raises questions about whether the UK economy has reached a peak and whether we are heading to a technical recession, especially as consumer confidence is negative and the weakest since 2008. So overall, I think this week's data may not eliminate fears of an economic recession, even if they show a relatively healthy yearly expansions for Q1.
Let's also have a look at the pound, because last week's Bank of England meeting sunk the currency to two-year lows, and it seems like the pound is taking its cues mostly from moves in the stock market lately. Therefore, can this week's GDP report move the pound at all?
Indeed, the pound had been strongly depreciated over the past 3 weeks against the US dollar, and from a technical perspective, it has recently stabilized itself around the key 1.2312 support area, which makes a rebound likely in the coming sessions. Well, perhaps a stronger than expected GDP reading could endorse additional rate hikes in the coming months, helping the pair to recover a bit, but overall I don't think that the data will trigger any sustainable move in the currency, since investors will be more interested about the next GDP and inflation data to get more information about the impact from the Ukrainian war. Besides, the Bank of England has already admitted that a recession is possible at the end of this year, so investors are already pricing in this scenario. They just don't know how the size of the slowdown, how big that slowdown will be, which they will, of course, figure out later in the year. And for now, that uncertainty will probably block any significant rebound in the currency. Perhaps if US data start to slow down and the Fed starts to question the aggressive rate hike pricing in the market, that could potentially provide a stronger boost to the pound.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.